Thank you, Haley. Yes, the panel name is The Potential of Forestry and Agroforestry as a Natural Climate Solution. I'm absolutely delighted to be here firstly, also delighted not to be the first panel of the day. My improvisation skills may not quite be at Felicity's level. That was very impressive this morning, what she did. My name is Martin Paulson. I run a business called Acacia Sustainable Business Advisors, mainly on the advisory side and working with fund managers, SMEs, NGOs, DFIs and public institutions, helping to work on natural asset-based finance solutions. So I help to design funds, help to work out how to structure platforms to attract more capital into this asset class, work with fund managers, work with SMEs on their strategies, etc. Very much focused on natural assets, which is, of course, agroforestry, forestry, agriculture, more and more the oceans as well. So very happy to be here. If you ask me, or if I was responding to Felicity's question this morning as to why am I here, my answer would have been, and it was mentioned this morning, the pension fund money. It's a slightly specific answer, but having worked as a development banker for 10 years and as a fund manager as well, I established a Moringa fund, an agroforestry fund, in 2013, 2014, raised money from the public sector, the private sector for that. The answer is a fairly simple one for me. It's how to work out how to make that money flow, that capital flow into this asset class. We can call it that, or we can also call it a theme, as was said this morning. We'll discuss that on this panel this morning. So that would be, something's coming through on my sound here. Let's just switch this off, excuse me. I think I'm in a different conference call as well. So that would be the simple answer to the question, how to make that happen more effectively. And there was reference was made to the wall of money as well. I do believe there is, in a certain sense, a wall of money. Some of it's quite close to where it needs to be, some is still a long, long way away. So let's discuss during this panel a little bit as to how to help that capital to flow for good reason. There are great investment opportunities in this sector. They may not be familiar investment opportunities, but they are there. And getting the message out there as to what the real opportunity is, both for financial returns and impact returns, I think is something we'll unpack just now. So let me stop the introduction there and ask my panel to introduce itself. We'll start on the left with Petri. Petri, would you like to introduce yourself, please? And
yes.
Also, please tell the audience why you're here, actually,
okay.
Once you finish introducing yourself.
Thank you very much, Martin. So my name is Petri Lehtonen, and I have background in forestry and finance. Currently, my main job is to advise European Commission. I'm a member of a facility called Forest for the Future facility, and we are advising European Commission for the international partnerships how they will do different forest interventions, mainly outside of Europe, mostly in emerging countries. And specifically, my task is to see how we could leverage more private finance into forestry or forest-based value chains in general. And why I am here, I think that this is an opportunity to see how, actually in my own job, how we can give advice to this European Commission and let's say how we could kind of combine public finance and private finance. Thank you.
Thank you, Petri. Lo, over to you, please.
Yeah, thanks a lot, Martin. Well, I'm really glad being here, and actually face-to-face conferences seems a bit unusual now. So I'm Laure Bourgeois. I'm a senior investment officer at Proparco. Proparco is the French DFI, so basically we have a mandate to finance project companies in developing and emerging countries with a double mandate of impact and profitability, and always in line with the sustainable development goals. I am part of the agriculture team, and I actually also focus on forestry and natural-based solutions. Thank you.
Thank you very much. Laure, passing to the right, Sandeep.
Hi. Thanks, Martin, first of all. I'm still a little flustered. I flew in from India last evening, and I'm still a bit lagged. So there might be a lag, just how you have in online meetings for my responses. But yeah, I'm Sandeep. I'm from a company called Network Ventures, stands for VNV Advisory Services. It's a project developer based in Asia. We work in about 14 countries in South and Southeast Asia. Specialization is carbon finance. I saw in the morning that there was a lot of interest in the carbon markets. That's something that we've been doing for a while now. It's been about 15, 20 years of that work. We run about 150, 200 projects, out of which about half of them would be in the nature space, and about half of them would be in the agroforestry space, as is being discussed today. So here a bit to talk about that. Why am I here? I think we need to drive some sense into this wall of money. I think there's a lot of money going around, but there's going to be a lot of senseless deployment of that money, I believe, and that's something that we need to regulate, or at least understand a lot better from the project side as well. This is not just about the finance side. So here, hopefully, I would be able to interact with some of you just to drive in, also the understanding of how this money can be impactful and deployed in a more, I wouldn't say risk-free manner, but at least more effective manner. But yeah, that's where I am. Thanks, Martin.
Last but not least, Petri, please, and tell us why you're here as well.
Hi. Yes, my name is Petri Kuusisto. As you can see, Petri is a very common name in Finland, but it's not the only name what Finnish male are carrying. I'm mostly an investment person, so from my background, I've been running two of the largest pension funds in Finland in my early part of the career, and then been also managing one sovereign wealth fund in the Middle East. But 20 years ago, I already got involved because my pension fund decided to invest into a forestry company called Tornator, which is 600,000 hectares plus, and it was a spin-off from a forest industrial company. And it was a good view to me as the newly appointed chairman to see how poorly the forest industrial players were managing their assets. And already those days we were able to do a lot of conservation deals. Were able to manage the assets so that even though those days still it was very much a wood-based return generation. Today it's a lot other revenue sources as well. But that Tornator experience later led me to be the co-founder of Dasos Capital, which is today close to 1 billion forestry investment fund. So during the financial crisis, we had fun time to raise a first fund, but we managed to do with the help of a couple of anchor investors from EIB and the pension fund money. And since then, that entity has developed. I've since then launched some other asset management companies and sold them as well. Today, my passion is on impact investing, and I think earlier today there was some mentioning about how do we need to change our mindsets to divert us away from the modern portfolio theory. And I've recently launched also something which is called sustainable portfolio theory, which is supposed to be a impact investing decision-making framework. And I think I'm here today because I want to talk about impact investing and the different new ways how to implement it, because if we continue using modern portfolio theory and the change definitely is not going to come from the investment office, and probably this is the topic we come back during this panel.
Great. Thank you very much, Petri. And for those of us on the couch here, too late, I'm realizing we're surrounded by Finns, which some nations on earth might find a terrifying prospect at the moment. But too late. I'm going to ask some questions to the panelists, but then I'm going to come to the audience. There was a great number of excellent questions this morning, so we will call on you again. But I'm going to get things rolling with some questions to the panel. As you can see, we've got some very interesting combinations here. We've got project developer, we've got a public financier, we've got a technical expert, we've got an asset manager, so there's a very interesting set of perspectives here. I'm going to start with you, Laure, with the first question, which kind of ties into this question of how to unlock capital. But could you just talk to us with your specific example in mind? How does Proparco play its role as a catalytic investor for agroforestry and forestry investments to try to bring in other participants in the markets who might be already participating or thinking of participating in this investment type?
Yeah, sure, thanks. First, well, of course, this type of financing right now, like climate-related, forestry, natural-based solutions, are really like at the top of the agenda of Proparco, but also of most DFIs and most financial institutions now. And we really believe that the private sector should actually, are actually prioritizing investments in this area. Already this morning we had an excellent panel regarding like the capital flows and how to actually support the projects at the different times of the project, like when they are a bit like developing, still early stage, then when they are more mature, well, obviously it's not much of a question and it's attracting a lot more capital, But as Proparco, so basically we are a DFI, how we work. So we would carefully select the projects. What's really typical for forestry and agroforestry is the time scale of the project. So basically, even if DFIs are long-term financiers, it's usually even longer than what we usually do. Like in corporate financing, usually we would provide debt financing from 5 up to 10 years, but here sometimes we're talking even longer tenor, so it's quite challenging for us. And also, the risks are higher than the typical corporate financing. You have, well, the country risk, because we're talking about financings in emerging and developing markets, but that's something we're really used to, and that's within our mandate. But we have also all the operational risk, the climate risk, the agri-risk, etc. So when we look at these type of sectors, we would really carefully select the project we actually would like to finance. First, we're looking to work with really like competent, knowledgeable sponsors, people that already have a good track record in the industry. This morning they were talking a bit about KYC as well, so KYC is really key for us. And we are looking really into details on the environmental and social aspects. So we would do really in-depth due diligences with the help of consultants, because we have some internal experts, but we cannot be experts on everything and in every specific project. And we would basically, we're there to support companies in their growth phase and also in improving all these environmental and social aspects. We know we won't finance companies that are already compliant with the highest standards, but we are there to support them, so to put in place an action plan that we would help them put in place during the financing. And we are not letting them do it alone. And when required, we can actually provide technical assistance, which can have different forms. It can be like supporting, like for climate, for instance, helping them like having a study on the climate vulnerabilities and how they could actually mitigate it in the future. And our role, we really see it also on some projects as first movers. So of course, well, we don't finance the project really from scratch. We think like we are not, our financing tools are not adapted for like the feasibility stage. So we are coming a bit later when like some plantations have already been put in place and we are not too far from profitability. And well, basically we are so helping them at this stage, and by having DFI support, these companies, these project developers would basically show that these projects are sustainable on ESG as well, and it would actually later on attract new people working on new finances. And something else I wanted to add, and then I'll stop, is that we partner a lot. So we work a lot with other DFIs because we think we should basically all share knowledge, and that's also why we are all here today. Is basically we know there are a lot of challenges, and we need to discuss. We need to see what worked, what didn't work, and how we can work on this. We work with commercial banks. We definitely also work with impact funds, etc. So we really believe in partnership.
Great, thanks, Laura. And so then you can really sense the kind of way in which DFIs raise the bar on key aspects of the underlying business's operations and provide reassurances to incoming investors. Petri, we spoke a bit about the value chain before this and the importance of if we are going to have capital flowing into the different actors in the value chain, that the alignment of interests needs to be matched up, and that there needs to be a consistent thread which is drawing products through the value chain all the way through to the end consumer, which is taking account of some of the non-financial aspects. Could you tell us a bit about that, how you view the importance of aligning interests in the value chain and how value chains can be changed, adapted, modernized to make them more financeable in a certain sense?
Okay, thank you. Maybe it's first important to emphasize that different value chains are quite important, because that's the only way we can value the assets, value the forests. And value chains can cover many different products, wood products, non-wood products, or also ecosystem services, as we will know. So they all can come up as value chains. And my kind of experience is especially in emerging markets. So now when I talk about this case of value chains, it's in emerging markets where we don't really have well-established value chains. We have lots of challenges. So I think the kind of first thing is scale. How can we build up scale? And if I think the assets, and in many geographies, the only way to kind of have an assets is with rather small forest owners or farmers. So it's important that there is a kind of organization that is able to integrate these farmers to scale up. And sometimes it is in place, sometimes it needs kind of extra support. And the other way to scale up the assets is that the companies who are there in place, that they partner with the farmers, outgrower schemes, or other kind of partnerships. So I think it's important to already have a kind of scale in that sense. But that's not that's not enough. And I will take an example of wood value chain, because that's something that we are quite familiar. It's important that we have sufficient industrial capacities, scale in the value chain, that because when we have a kind of serious industrial operator, it also means a long-term interest, so that they will be there for long-term, and their interest is that they will get the kind of sustained supply of raw material. And when there is scale in the industries, it can also nurture kind of clustering, attracting other companies to operate in the same landscape. And this kind of, let's say, serious companies have a higher capacity to pay from wood, which is very beneficial for forest owners. And then also, like when we think the whole value chain efficiency, it means that we can use the raw material more efficiently, do more from less, and have a higher value added in principle. And I think it's just to give this big picture, it's important that's considered in all these investments.
Great, thank you. So the importance of making that full value chain work to make it as financeable as possible. Let me turn to my right now. Petri, we've spoke a bit about also agroforestry as a way of moving the paradigm forward, I suppose, and allowing the financial objectives to be achieved, as well as the impact and environmental and social objectives. Perhaps you can just take that on a little bit and talk about that, the importance of that model, and unpack that a little bit for us.
Yeah, I think the forestry idea has been already much further adopted with the investors, and of course now when being markets are being led so much by the carbon and carbon credits, we forget that there are other investment possibilities within the agroforestry, which may actually have much bigger potential than the traditional forestry projects, even though they are important as well. And the agroforestry especially will be important, very important in the less developed areas. And the challenge is now to find the investor's mindset to change, that it's not only financial return what we are trying to achieve, that the investors can figure out the why of their investing. Is there something we care about? And if there is an impact which is clearly defined on the intentionality basis, we can see more solutions like some of the funds, like the earlier we had pollination, HSBC pollination fund, Mirova, and some other larger asset managers are stepping into this area, finding investment opportunities. And my personal belief is that this will grow a lot in volumes. And it's just, being early, like on my Tornator case, 6 years and your equity was five-folded, you can find areas which are very, very profitable. But the mindset, how you look at these investments need to change, so that you see also other items than the traditional financial modeling type of a money exercise.
Great. Yeah, the importance of the mindset change. And let's continue that thread. I'm going to ask Sandeep to come in now, because he's involved as a project developer at the grassroots here. Agroforestry is a big theme for you, Sandeep. So can you just talk to us a bit about your approach to structuring projects, and then also, and it's been touched on this morning quite a bit, carbon markets, we all know them pretty well now, but there are other sources of income through ecosystem services and others. Perhaps talk about that as well, how that fits into your model, Sandeep, please.
Thanks, Martin. Yeah, actually, I think Petri laid it out. Value chain. I think agroforestry carbon projects are not just about the trees. A lot of people confuse about the number of trees being the only impact marker on a carbon asset project. That's not true. If you don't create a value chain, you're not creating permanence. And like the Petri on my right mentioned, to really have ecosystem restoration and biodiversity, it's a 120-year-old kind of a game. Carbon finance is there for 10, 20 years, tops 30 years. So you need to make it more effective. And how can you make it more effective? By front-loading some of that investments into the value chain creation. I meet a lot of asset managers, investment bankers who think front-loading investments is actually risky. But if you create value right up front, it's actually de-risking your entire project for the next 15, 20 years. And for me, carbon offset project permanence lives in the value chain. Now, when I say value chain, what is a value chain? If your agroforestry system, and we work on large-scale projects, so we have this program called Trees for Livelihoods, which is basically aiming to plant over 500 million trees across about 6 countries. And we are concentrated on the market linkage of each of the products that are being planted. And this is not just about timber. I know a lot of the morning conversation on agroforestry revolved around timber. It could be part of the mix, but there are lots of other value that can be derived out of a forest. It's not just something that you can chop off. So let's first, things like, he had mentioned that Martin had worked on a moringa supply chain. Likewise, you can create mango supply chains, jackfruit supply chains, a lot of other supply chains. Now, what does a supply chain mean? Creating processing centers, creating warehousing, creating all of that. Now, if you can blend in carbon finance, front-load it towards the CapEx, towards these value creations, you're actually creating a more permanent project for yourself. And I'm not talking about industrial level agroforestry, I'm talking about smallholder agroforestry. And for me, the definition of a smallholder would be anybody who's less than 3 or 5 hectares or less holding of land. So the only way to achieve permanence, and it's a question that asks a lot of us, how do you de-risk this project? How do you know these trees are not going to get chopped off? If you've created value for the federations and communities at a group level, then you achieve what you aim to achieve in terms of a carbon offset project. A lot of carbon offset projects today are looking at carbon offset as an incentive to keep the tree alive. That's a wrong way to look at it. Because that money on a smallholder level is actually quite low. And we have seen from our experience that that's usually gambled away or drunk away. So instead of doing that, no, that's true. If you go to Thailand, Bangladesh, Myanmar, that's exactly what happens. You will pay them $10, $20, $30 tops every year. That has no meaning. But then multiply that by 100,000 farmers, and then you have some capital to do something with it. And that's how this should be looked at. And that's how we look at it, at least. So yes, we front load a part of the carbon investment based on ex-ante estimations, but that's the only way to ensure permanence of a very large-scale project. For me, that's how carbon offset finance should be looked at on the de-risking part. Creating the value chain. Mango pulp sells at a higher price than mango. That's something even a farmer understands, which is why he'll keep that mango tree alive or wait for the fruits to come in. So these are things. Now, how do you create a pulp facility? It's not very expensive. But if you can do that at village levels, federation levels, that's how you create a community of permanence. As otherwise, this incentive-based payout for me is wrong. Second, carbon finance needs to be part of a larger investment play. It cannot be the only thing that funds the program, which is where you need to create markets, you need to create different kinds of financial mechanisms. You can create insurance products. We're working on crop insurance for the agroforesters as well. That actually helps building up more integrity into the project. So those kind of different financial instruments need to come in. It cannot be 100% just carbon finance project, then you're not really building a very, very robust project. I'd stop there. Thanks, Martin.
Great, thanks. And that ties in well to the value chain oriented comments of Petri. So we've sort of rounded out the picture a little bit. I think you've heard a bit about our panelists' perspectives now and where they're coming from and their experiences. Questions from the audience, please feel free to raise a hand. I think we've got a mic to go around, either based on something that's been said or simply on the topic of the panel that we're in. Any questions? Here's one. There's one here. There's a gentleman here as well. Yes, please introduce yourself if you don't mind.
Yes, of course. So I'm Casper Kupperman. I'm here in name of the Green Branch, which is a developer of carbon forestry projects. And Sandeep, thank you very much for deepening into your view on carbon crediting and how it should be used. And for a very large part, we do agree. However, what we see is mostly reinventing forestry and agriculture as is traditionally. What we see also is an enormous need for soil restoration, for ecosystem restoration, and we have a very hard time trying to mix that in because it does primarily rely on carbon and on the other biodiversity credits, which are very, very new. So what is your take on this, and how can we include this part also in the mix?
Thank you. And perhaps let's take the second question here while the mic is around.
My question was just to fill the silence. However, I'll tell you what it is. It's Sandeep. You went from 3 or 4 hectares to what was it? 500 million. I didn't quite follow that jump in terms of whatever it was.
Okay, Sandeep, the question's heading your way. So if you'd like to take the first 2 questions.
Yeah, I'll take that one first because that ties into the question there. And when I say 500 million, it's multiplied by 5 hectares or 3 hectares. That's the amount of number of people you're talking about. And that's a possibility given the kind of populations that we have in our countries. So it's not an out-of-the-world outlandish claim to be saying that we will need 5 million or 10 million farmers to plant 200 or 300 trees on their farmlands to achieve that kind of number. So that's where I went from 5 hectares to that, which is actually, in a way, carbon offset. And this is for me, this is my personal opinion, is also a form of climate justice because these farmers today, I mean, we're experiencing a heat wave like no other at this point of time. Anything that we can do to increase the livelihood of that farmer is actually justice done to a large extent. That, for me, is also ties in with the whole concept of carbon offset, in my opinion. And to your question, yes, I think you're right. I think there needs to be more instruments that need to come in because ecosystem restoration doesn't necessarily always have a business case apart from some form of ecosystem-based payments. People have been dabbling on ecotourism for too long, I believe, as the only business model they can think of. I am still to see a good business model of a restoration, which does not include, basically they either go for non-timber forest produce or ecotourism. These are the only 2 that I've seen as a revenue stream. If there are more and more robust models, I would still like to see them, but you're right. I think as of now, that's how this is going to be financed. But there are some models around. There's some interesting models around. I wouldn't say they're not. But at scale, we're still to see that.
And maybe if I
Go ahead,
could
Laurie.
add on this, so basically, yeah, we're confronted to kind of the same topics where like financing, the usual like forestry financing we used to do in the past would be like more monoplantations with processing, because we also really believe in the benefits of value chain. But now we really focus more and more on conservation, restoration, regenerative agriculture, etc. But on its own, it's still quite difficult to finance. Like it's more actually right now for public money, donors, foundations, etc. And something we are seeing more and more, and also looking at encouraging, are these kind of mixed projects where you have like a part of commercial scale, more plantation, and part conservation, restoration, and how you can actually have the same have them under the same umbrella and could actually attract financing. You still have the issue of like really the deferred profitability, the deferred cash flow, and that's where, well, we talked about it already, but I really believe some blending financing is required to actually have some risk sharing or de-risking and like help actually deploy the capital to this type of projects. And we would also not finance projects that solely rely on carbon credits as a revenue source. We actually even use not to consider this revenue line at all because, well, the market was still like, at the beginning, it was quite volatile. It crashed at some point. Now it's way more developed. So we are actually increasingly looking at how this could also be considered as a real revenue stream on our side as well. And something else I wanted to add is, so we're talking about, exactly as you were talking about, like, it's not only carbon sequestration. You have many more impacts. And right now, the difficulty is actually to be able to take into account these impacts, which basically don't have much value right now. And like when you do like regenerative agriculture, etc., the benefits actually might appear after the financing. So how you take them into account when you actually do your first financing, and it's something, well, that's still really a live discussion right now, and we don't have like really easy answers, but that's something I wanted to say.
Great, thank you. And so behind these comments, you can see that there's this idea of change of mindsets and pushing people's thinking forward about what is a sound project, both financially, environmentally, and socially. One of the things we discussed in the panel, it's an open question to the panelists, I guess I'll put now, but just biodiversity sits behind this. It's a significant driver, I think, that is not necessarily recognized by investors for its importance today. It is something which can tie into credits of some sort, which could attract financial benefits to projects. I did some work not long ago for World Wildlife Fund to help them think through how you could define biodiversity impact and therefore connect it to potential flows of cash to recognize those benefits. Would anybody on the panel like to just pick up the question of biodiversity and how financiers should think about it in terms of when they're making investment decisions? Looking left and right.
Well, I think
Petri, maybe start Petri and
Yeah,
then we'll come to
I
you,
think
Laura.
biodiversity is not that much more. Well, carbon feels easy because we can measure the tons. Biodiversity credits people are trying to create now, and any formula you can create any formula for outcome-based bonds, for example. So debt financing is a big possibility. You look at the Rhino bond, which was issued last year, or the Belize bond, where CCC rated government was able to end up in marine conservation through the creation of a SPV and a partial loan guarantee. And with the massive amount of loan cost savings, you were able to allocate cash into marine conservation. So you have, but that's an example where you are not measuring that much, because on the carbon I think it's too easy route if we try to measure every impact and then monetize it in one way or the other. You just have to believe onto the impacts and the improved outcome in the end, and possibly you need to create a different value mechanism for the impact side, because money is too short-term focused to evaluate the outcomes.
Great, thanks Petri. Some good examples there as well. I'll come to the other Petri just briefly, and then also Laura, and then we'll come back to the audience for any other questions.
Okay, very briefly. So I think we have to think why actually why we have to think about biodiversity, and one reason is that when we have an asset which has, let's say, biodiverse asset, it's more resilient for the future, and it's especially important when the climate is changing to kind of adapt to the new conditions. So I think that's what scientists have already proved, and I think many companies are aware. So I see this biodiversity, it's a kind of risk mitigating factor, long-term risk mitigating factor. And there are good practical examples. And I think when we talk about agroforestry, it's about that actually. It's kind of mitigating it, even that we have a kind of production system that is resilient for the future. And for, let's say, many companies who are supply chains, for example, with coffee, they will ensure the future supply when they know that the sourcing is happening from these biodiverse sources.
Laura, anything you want to add?
No, I just fully agree with both Petris. Actually, on these impacts, the way we used to look at biodiversity was more like on a do not harm way, so how not to harm biodiversity, which is something that's really changing now. So I agree, it's really hard to monetize. The impacts are really further along the way, but it's crucial for the future. And actually, if you don't take into account now, if you put a lot of fertilizer, etc., like the soils cannot absorb any nutrients anymore, then for the long term, it just won't work. So I won't add anything more.
Great, thank you. I think we have about three or 4 minutes left now. There's a question here. Second question from the audience. We've got time maybe for 2 more, and the lady here. Yeah. Any other questions people would like to take the opportunity? Raise your hand if so. Yes, please.
I just want to talk about biodiversity. So Dr. Ralph Charmy from the IMF is actually valued a whale at about $3 million each. And there's also a gentleman who is working with him who has valued an African elephant, at about $1.75 million. These are valuations that have been accepted. And the reality is that a whale, when it goes under, eats, and then comes upstairs and poops, and its poop is eaten by all that phytoplankton, they absorb more CO2 when they put together than some of the forests around. So just to let you know that there are valuations out there right now. The second thing is...
There are what?
Valuations of biodiversity. There are valuations out there. But when you actually think about how do you now put a monetary equation to that, the problem is, are we going to now spend another 5 years, 10 years discussing the value of biodiversity and how we can put capital inflows? Or would it be not sensible just to simply add a biodiversity addition to the carbon so that you have a massive price premium when you sell a carbon asset which has a biodiversity value? That's what I think is, I'd like to ask the audience whether you think that is a viable solution. Because if you have a climate crisis and we have a 5-8 year horizon, to spend 10 years discussing how we're going to value something, it's just going to defeat the whole purpose of the exercise.
Okay, thank you. And I think that was probably exactly your point, Petri, right? Finding pragmatic ways to attach value to these things.
Exactly.
Do you want to respond to that point?
No, I think, yes, every asset has multiple valuation points, and I think the smart investment people will spot these biodiversity values. Whether they are able to price it in a different way, I don't think so. Somewhere there will be a market price. but still you can make a very good investment if you really want to think long term. Okay, I'm getting the carbon, I'm getting the biodiversity benefits, and then you need to add what else is there on the plate. And you have massive amount of, especially with the agroforestry, you have massive amount of social benefits which are there, which we haven't discussed yet.
Sandeep, go ahead.
No, I just wanted to make a quick point. I mean, I was just thinking about it. There are biodiversity valuation framework. It's not that they're not. I think Edith is in the room somewhere. She's worked on a lot of work with Mirova and valuations. I see her now. But there's a lot of work that is going on. I don't think that it's not there. Just a quick point on something that I picked up in the morning panel. I think that's going to be detrimental to biodiversity at large. Somebody is discussing carbon offsets for large-scale commercial plantation. I think we should keep it out of emerging countries because our legal frameworks will not allow us to have that as a carbon offset program because it will lead to random buying of land, and our legal land titles are anyways a little suspect. So that's something that I just wanted to quickly touch upon. While it's fine for most developed economies to do that with the kind of legal frameworks that you guys have, it will be a death knell because it will be cheap land, cheap credits, cheap timber, all of it putting together to the global south. I think from my personal perspective, we should keep carbon credits out for large-scale commercial plantation from the global south. You guys want to do it in Canada, Australia, go for it. Do not bring it to the global south. Just a quick point on that because that ties into the idea of biodiversity as well, actually, because that's going to kill biodiversity.
Thank you. I think we're close to wrapping up. If the panel members have any final comments they'd like to make, otherwise let me just sum up quickly. I mean, we started talking about how to unlock capital a little bit. I think it's been great to have the panel talk about the importance of changing mindsets. I think many people are conscious of the need for that, but it's really a fundamental point. Helping to identify ways of managing the risk that people associate with natural capital solution type projects. Finding ways to monetize the impact. There's lots of intelligent people thinking hard about how to do this. The carbon markets are doing it well at the moment. Other creative ways are coming in to monetize other aspects of these projects as well. The importance of connecting supply chains in a coherent way, value chains, so that when people are looking at financing parts of those value chains, there is indeed a link all the way through which drives capital in there, not just for profit reasons, but also for the more rounded picture associated with the environmental and social aspects we've been talking about. Those are some of the key things that I think we've unpacked quite nicely here. So thank you very much to the panel for being here. Some have travelled far, Sandeep, I know, some a little bit less far. But thanks very much to all of you. A little round of applause for the panel. Thank you very much.